Success is achieved and maintained by those who try and keep trying. W. Clement Stone. My friends, enthusiasm, commitment to the cause. What's your cause at this channel? It's learning to read stock charts. You can do this. I'm your biggest fan. I believe in you. 10 to 15 minutes a day is all it takes. And you have to believe in yourself, and you have to maintain that enthusiasm. I have found in life here, getting close to 60, the people I know that achieve the most are those who believe they can do it. They tell themselves they can do it. Yes, they have doubts. Yes, of course they do. Everybody does. But staying enthusiastic, smiling, pushing through, continuing to keep your nose to the grindstone, to keep at it, to keep going, knowing that you will not give up. That's when success releases itself to you. Please trust me on that. Stick with this. You can do it. Now, let's jump into these charts. We see stocks are up for the day. The S&P 500 up the most, 1.46%. The NASDAQ 100 up 0.71%. We see 20-year bonds down right at 2%. Gold down a little over 0.5%. Let's figure out what's going on here. First thing we see when we look at the weekly chart is we see we're getting closer and closer to the potential of a weekly vertical crossover going up. Now, that hasn't happened yet. We have seen times in the past where we have a bounce off. Don't know that that's going to occur. We see the price percent oscillator again getting close, heading up, hasn't crossed yet, still in negative territory until that crossing occurs, and it can't happen until Friday. Because remember, no candle is drawn until that candle is drawn. You can't call anything on the candle until it is complete. Derivative oscillator getting closer to crossing over in the positive direction. We'll see if that can happen by the end of the week. Now let's zoom in and see where average price movement is. It's still about where it was, topping out over the last 3 weeks. It is a little bit higher. Let's see. 288.27, the highest it got going back a couple of weeks, 287. So we'll see how much more strength it has to keep moving. Now we leave the weekly, we go to the 2-day. What do we see there? Again, we still see things sliding sideways. The price percent, that is as far as the Heikin-Ashi candlesticks go. Now we put a lot of faith and a lot of energy into our price percent oscillator. It is heading up. Derivative oscillator peaked. And again, if you watch the derivative oscillator, it doesn't call the bottom typically. What it calls is where the energy starts slowing down. It is our leading indicator. When we look at the movement down, we saw on the 16th that energy reached its peak level. Then what we saw happening was the prices as far as the movement down started slowing. That's what our leading indicator, the derivative oscillator, shows us. When we see it starting to reduce, it shows us that the price movement down is slowing. It doesn't mean that there's up movement. It means necessarily. It means that the down movement is slowing. That's what we see. The opposite is true when we see, and again, it's the oscillation, okay? It's the energy that's there. We see that starting to peter off on the weekly. Now, it doesn't mean that it can't gin up again and go higher, but that's what we're seeing. So the derivative oscillator is still moving up quite strongly. Price percent oscillator still moving up quite strongly. Derivative oscillator still positive. And of course, that weekly chart is moving up. So hasn't crossed over yet. We'll continue to watch, see what there is to see. This 4-hour chart, we can see where, again, we're going above those prior highs, popping up in the afternoon. Higher, we've seen it continue to track up, getting close to a crossover on that 4-hour chart, going up. Finally, we'll see what Tuesday looks like to us. It's going to be important if there's a crossover on the price percent oscillator. So we'll watch and see how those oscillations maintain, or is there going to be a bounce off and everything start rolling over? Don't know. Don't know if that occurs. What's the first thing that's going to happen? Well, we're going to see that 2-day chart crossover going down after the 4-hour, but don't know that's going to happen. But a 2-day recross with that weekly still in a downward position would give us the ability to jump into a short trade. I don't know that's going to occur. I'm just telling you what the possibilities are. Remember, they're up, down, or sideways, and mostly up or down. So that, when you hear that, it makes you realize how complicated is what we do. We're trying to determine if stock price is going up or down. It is complicated. You see, if you've studied our teachings on complexity theory, you understand how difficult it is in a dynamic marketplace. That's why we trend follow. So we have a special training for you today. I think you will get a lot out of it. It's called Pulling the Trigger. It'll be in your show notes. If you're not a subscriber, you need to subscribe, my friends. That's where you get that special training every day. It's for free. Go to chartingwealth.com. Look at what we see on the cues on the weekly chart, already starting to cross over. Now, the week's not done yet. We're not about to jump in early until this candle ends and it actually maintains a crossover. If it's a big down day tomorrow, you can see it pull right through that. We'll wait and see what there is to see. We can see that as far as the high goes for the day, 216.63, 216.51. So it's not reached a higher high than it did 2 weeks ago. So derivative oscillator, barely negative. Price percent oscillator, first day of the 5-day candle trying to cross over. What do we see on the 2-day chart? Again, high 216.63, that prior high 216.51 reached back on the 2-day candle ending Friday the 17th. So again, derivative oscillator losing momentum, but that all-important price percent oscillator is heading up. We'll continue to watch. What do we see on the 4-hour chart? Just flat, hasn't crossed over going up. Derivative oscillator has, but the price percent oscillator hasn't. Up in the morning, a little bit of a pullback in the afternoon. Again, the Q's not up, well, up about half of what the S&P was. The NASDAQ 100 up 0.71%. That is the Q's. For those of you who don't know what I'm talking about, the S&P 500 up 1.46%. We're going to leave stocks now. Always go back to our weekly chart. We're going to head to bonds. Bonds down 1.85%, starting the week off with a red open box candle. It's not a red down candle. In fact, we've only seen one red down candle in quite a while. That was that funky week, the 20th of March. What do we see happening here? Well, we see a slowdown in the up movement. It's basically a little red spinning top first day of this latest weekly candle. Means indecision tending down. We see the price percent oscillator is flat, actually heading down a little bit. Derivative oscillator peaked all the way back on the 6th of March. Has been moving down since then, so we'll keep our eye on the weekly chart. We go to the 2-day. We can see that it bounced off the red signal line and is pulling away from it. And again, the weekly still in a confirmed up move. The 2-day still in a confirmed down move. It got up close and then bounced off and heading down. We'll draw this trend line for the 2-day when we get a chance. There just isn't the ability to really do it yet. Derivative oscillator, barely positive. Price percent oscillator, like I said, pulling away from the red signal line. Go to the 4-hour chart. What do we see there? We see a down movement in the morning, further down movement in the afternoon, hitting, tapping that weekly trend line. So we'll continue to watch, see what there is to see if there's enough down movement in bonds over the course of the week to rotate that weekly over going down, or if we're going to see things pop back up. Just don't know. Don't have a trade at this point on bonds. We'll wait and see how things shake out. It is good though. Stocks are up for the day, bonds and gold down. We like them to be converse to each other. We don't want to see everything up or everything down for the day. Bonds and gold ought to be moving in the opposite direction, whether up or down, than stocks. That shows more of a healthy market, more of healthy things occurring. Why? Because bonds are typically a place where people put money when stock's not doing good, put their money in the stock market when things are doing good. Same with gold. Okay, let's go to gold now. We're going to leave bonds. Whoops. We see gold down 0.63% for the day. When we look at the weekly chart, we can see where gold hit its high back on the 17th at 164.42, and then's just really been sliding sideways, losing a little bit of momentum. We can see the derivative oscillator's gone positive, but the price percent oscillator is just sort of continuing to flatten a little bit. Like we said, down for the day a little over 0.5%, just barely above that 2-day trend line. So again, gold still in a confirmed up move on the weekly chart. We go to the 2-day, and again, 2 days going flatter also. Derivative oscillator peaked all the way back on the 2-day candle ending Wednesday the 15th. So of course that would have represented Tuesday and Wednesday the 15th of April. Then started sliding over, popping down strongly on the 2-day candle ending the 21st. And then up on Wednesday and Thursday. And on Monday, again, we're just seeing a sideways slide there. Derivative oscillator continuing to lose momentum. So we go from the 2-day to the 4-hour. That's where we see where things topped out back on the morning of the 23rd. That was Thursday of April, sliding sideways and then just sort of accelerating down, pushing through the 2-day trend line on that 4-hour chart. So we'll continue to watch, see what gold leads us to see. You know, we're waiting to see if gold's going to cross over going up on that 4-hour chart. It is our weakest of trigger pulls, but the 2-day and the weekly are up. But again, might be enough down movement in that 4-hour chart to pull gold over going down on the 2-day. So we'll watch. We'll see what there is. If it's a big down day tomorrow, you might see gold pop up in the morning and cross over. Might give you an opportunity to do a practice trade going up on gold. Maybe, maybe not. Keep that in mind. Folks, that's where we are as we end the day. If that's all you're interested in, are those 4 main charts. Of course, for those who like a little more, we're going to go on to oil, Bitcoin, and real estate. If you hadn't purchased our book, please do so. We have an autographed copy waiting for you. We do appreciate that support, and of course, we love and appreciate our Patreon supporters. Don't forget, at the beginning of May, we will have our live question and answer call-in special training for our Patreon members. We do that every month for them at any level. The $30, $1 a day is our starting level, and we so appreciate everyone. We've got all sorts of special training for you. Short chart training, long chart training, Bitcoin training, all sorts of great stuff. So that's where we are, folks. Now I'm going to go on. Thank you so much for those who don't care for any more. We're now going to go to oil. Oil, what do we see in oil? Oil flat for the day. Now, when we start the weekly candle, let's go there. We see, again, it's showing us this is average pace. And of course, we're talking Heikin-Ashi candlesticks. They are calculated differently than others, even though it was a flat day. The calculation on the Heikin-Ashi shows you continuing push for down movement. Derivative oscillator losing downward momentum since it peaked in that down movement back on the 27th of March. But we see that derivative oscillator continuing to move down. We go to the 2-day chart. We see a green close box candle, which means a slowdown in the down movement. So it's not tracking as hard down as it was before. That's representing Friday and Monday. We see the derivative oscillator continuing to lose upward momentum. Price percent oscillator going down. 4-hour chart trying to cross over going up. But look at that. You just see oil just tracking sideways, not doing anything. Very interesting what's happening in oil. Trying to find a bottom to see if it can go up or if it's going to crash further. So again, I told you, I have been looking. Oil drops down to 150 something. I put in a buy order on it there, and also at $1. Figure, yes, there is some risk there. But again, not a bad thing for you to practice trade and just see how that goes. How low can oil go? Well, we're still on a petrodollar. It's got to stop somewhere. It won't go to zero. It just can't. Can it? Okay, let's get out of oil, and we're going to go to Bitcoin, up for the day 2.74%. We see the weekly chart still negative, but that price percent oscillator is heading up. Derivative oscillator peaked back on April the 3rd, the week ending then. And of course, we've seen some green candles since then. Week starting off with a green up candle. Go to the 2-day chart. It crossed over on Bitcoin on the 13th. That was Monday the 13th. Even though it was a red down candle, there was enough energy from 6 prior days to cause a weekly vertical crossover at that time. And then, I'm sorry, a 2-day crossover. That was 6 prior days, and then a 2-day crossover going up. Took it a while to get its legs, slid sideways, and then, of course, popped up on Wednesday, Thursday of last week, and Friday and Monday of this week. So trying to find its bottom and move up from there after some crushing down movement, down almost half. So it's gained about, it's brought its one back up to about 75% of its value before that last crash. And we look at the 4-hour chart, of course, we see it crossing over and heading up there on Thursday, little up in the morning and sideways on Friday, just sort of sideways on Monday morning and then up in the afternoon. So again, keep your eye on Bitcoin. You might have a crossover going up here at some point on that weekly chart. And look how beautiful those weekly vertical crossovers are on Bitcoin. Are they not amazing? Are they not prescient? I mean, look at them. Going back these 3 now. How far back can you go? Gets real sloppy. Oh, let me see here. Let's track that back a little bit. Gets real sloppy when you get back into the August time frame of 2018 through the mid of November. But again, after that and before that, quite beautiful. Quite beautiful. So keep those things in mind if you're going to be practice trading Bitcoin. Again, I love our charts. Okay, lastly, we're going to hit on real estate. What is real estate doing? Up for the day, 3.42%. Now, this is, of course, the Vanguard Real Estate Investment Trust ETF, commercial properties and such. We saw them lose about half their value, 45% or so, from the top around $99.72 to a low of $55.58. What's nice is when things are trading at $10 or $100, doing the percentage is rather easy. It's lost about 45%. What's it gained back to? About 74%. So of what it had been. So now it's about 74% of what had been 100%. We see the price percent oscillator heading up, derivative oscillator losing downward momentum, still negative on the weekly chart. We go to the 2-day chart, and of course you can see where it peaked back on at $79.99 back on the 2-day candle ending the 9th of April, then sort of sideways and down. So far, we see the latest 2-day candle, basically a green spinning top. Indecision, tending up, derivative oscillator losing upward momentum. Price percent oscillator still going up, though. That's good. What do we see on the 4-hour chart? Trying to cross over, going up. So up in the morning, a little up further in the afternoon. Again, what we see with real estate, what we see with oil and Bitcoin, trying to find their legs. Perhaps Bitcoin's finding it a little easier than the others. We'll continue to watch, see where things are. How low will oil go? Is it going to settle out about there at 266? Maybe. We'll keep our eye on things, folks. That's where we are as we end the day again. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters. You can do this.